The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the June 25th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential, folks, that is something we must master each and every day. So, in fact, let's go take a look at what it is that we need to master each and every day by starting off with a phrase here, a thought process. Wisdom, folks, think about just how wise you are and what wisdom is. And the reason that you're so wise is that wisdom is born of mistakes. All that we need to do is confront our errors and learn. That's the whole key. We've got to learn. You know, there's a difference between acquiring knowledge and possessing wisdom. We do them both. We acquire knowledge through universities, travels, relationships, books, workshops, maybe even watching here at TFNN.com. But wisdom, folks, that requires looking deeper into the meaning of things. That's certainly what we're going to do here at TFNN. We're going to look into the meaning of this bounce in the marketplace. We're going to see what kind of wisdom that we can get. The good news is, though, mistakes, folks, are nothing more than learning opportunities. And each mistake that we make, this is key, we must obtain the power of that learning experience. Remember, a wise person is one who learns from all. Have you ever experienced this, the experience where you say to yourself, I learned my lesson, I'll never do that again, I have said that. I don't know how many times, I know I've said that, and I say that you are just simply a brave and a courageous person if you said that and you actually do it. You know, don't keep making that same mistake mistakes twice out there. The only way to become wise is to actually make a mistake out there. What we want to do, wisdom is born, folks. It's born of mistakes. Just simply confront your error and learn. Let's go check out these markets. Let's go see if we can confront what these markets are doing. We got a little bounce going on here, and I do mean a little bounce. We're up 76 points. I suspect we may even be up higher at the end of the trading session today. You've got the Dow. We're going to start off with taking a look at the Dow, in fact. It's trading up 66 points. It's trading out at 14,724. And as we take a look at yesterday's candle, what was the meaning really of yesterday's move out here as we take a look at the Dow? That's what we've got up on my screen. If you're watching us on Tiger TV, maybe you're listening on the radio or your mobile device at TFNN.mobi. Thank you so much for doing that. Remember, the archive of this show is on Channel 10, and you can always get this show streaming live to your smartphone, your pad, or what have you, just by going to the homepage of TFNN.com. Over on the right-hand side, you will see a button that you can click on. It'll have three little smartphones, and you'll see these charts streaming live to you. We're taking a look at the Dow. You're going to take a look at two very pretty patterns out here. The first pattern, the light blue pattern, that was your Gartley buy pattern. That was when the market was moving down. It was moving down to this June 6th level out here. That's when people, if you go back, you know, that was coming off of the highs from May 22nd, and people thought the market was just simply going to come crashing down. You know, the market had, the futures were down that morning, and I was signaling to you, not so fast. We're actually going to see a bounce here in the marketplace. Why? Because when you get down, when you complete a pattern like this, which it was doing, and we were taking a look at volume, as far as volume coming down, what it was going into, just simply was signaling that the markets wanted to go ahead and work off an oversold condition. They wanted to bounce. That is really what we have in place here today, especially as you take a look at the swoosh down, the Nike swoosh down, coming off of the June 18th high inside the Dow, out at the level of 15,340. So now all the market is really doing is just taking a little bit of a pause. You know, like maybe you're watching a great movie and you just decide to hit pause because you're going to go do something else. In essence, I think that's really what we've got going on here inside the markets. Now, if you were listening on the radio show yesterday, I gave you a price target, my price target of where I believe the Dow is going to be headed to, at least the first general area where we can look at the Dow headed to before we start to consider taking a look at reversals during this unfavorable seasonal cycle. And that level that I gave to you was 13,691. And we're going to go ahead, we're going to convert over from a daily chart in a few moments to the weekly chart, and then you'll see where we have patterns that in essence come together out here. Now, I came up with that number, 13,691, because that was the 200-day exponential moving average that was in place at the close of business on April 30th, the beginning of the unfavorable 6-month seasonal cycle out there. That means at some point in time between now and October, we'll see a low in the marketplace. I believe that's going to be a buyable low, but we'll see. We'll have to watch how volume, we'll have to pay attention to these markets out here. It may be something, it's all going to also depend upon these markets as they pull back. And as they pull back into their October 2007 swing points, or as they pull back into areas where they had recently broke out. Because when you pull back into an area where you have broken out, much like the S&P 500 did yesterday by getting back inside the October 11th, 2007 swing point, the S&P is going to be the first one where we're going to get some type of information. What the S&P has done, it's coming down into that swing point with volume. So that is not a good sign as you come back into a consolidation level with volume. Let's get back here and take a look at what the Dow did yesterday. It formed a 1-to-1 A to B equals CD down. That's the blue pattern that you see out here, the blue line. Really just paying attention right now to the C to D leg. The A leg out here began at the high on May 22nd. Your low, your B point was your June 29th level. It's really our thunderbolt system out here. A lot of thunder and lightning last night in the skies in Clearwater. As we take a look at the thunderbolt to the downside that was coming off of the high on June 18th, your 1-to-1 price projection was 14,641. You actually got down to a low yesterday of 14,551. What was it doing? Well, if you go all the way over to the left-hand side of the chart, you'll see that what the Dow was actually doing was coming into the swing point from April 19th, and it was doing that actually with volume. It got down there, it rejected that area. It says it will be back down there to pay a visit of the lows, that low being 14,444. But not until it just creates a little bit of energy here and works off that condition. If we take a look at that C to D leg, you can take a look at that big wide-ranging bars the last couple of sessions out here, and that says that it wants to move lower. And then take a look at the energy on that C to D leg. Right now, substantially more than the A to B leg, and these are long legs out here. These are long-legged moves in the marketplace, and we're seeing these wide price swings every day. So here's the daily chart. So where is it headed to? I just said it came into the swing point from April 19th and was coming in there with volume. We'll be able to easily see that when we go take a look at the Dow Diamonds. That says it wants to go visit those lows, 14,444. It breaks out those lows, then what will it do? Then it will turn into a butterfly pattern. It will turn into an expansion pattern. And as we take a look at expansions from the low of that April 19th session all the way up to the high that was put on May 22nd, what you will see is the 1 to 1.272 expansion of that will take into the 14,145 level. That happens to be a 1 to 1.618 area. I suspect that we could see that as we come into the end of next week, July 4th. That's right now what I'm looking at. I'm seeing us come into the July 4th area time frame, whether that's going to be Wednesday of next week or whether it's going to be Friday or Monday. It's going to be into that July 4th area. We'll see a pretty decent bottom. Then we'll see a pretty decent bounce in the marketplace, but the lows will not be over. In essence, if I go switch over to the weekly chart out here, and that's where we're going to pull up the Dow. Remember, the number that I was giving you was 13,691. Let's take a look at the longer-term chart of the Dow. That's what I'm pulling up on my screen. We're taking a look at the rising price channel of the Dow from 2009. And it's a nice channel on the weekly, on the intermediate term chart out here. The Dow is still in an uptrend. No question about it. But if we take a look at where price will pull back to. I know there's a lot of horizontal lines going across my screen out here. Those are nothing more than the primary trading range boundary lines. But if we just simply come back into the lows out here from November 16th, so if we start off with that low all the way up to the high that was put in on the week of May 24th, the 618 level will take us right into, let me see if I can actually, I didn't mean to do that. Let's see if I can blow it up and actually, 13,644. Is that 13,644 is the number, and I was giving you 13,691. Now, what you'll also, as far as the minimum retracement, minimum retracement at this stage, I'd say 13,691, the minimum correction that we should be looking for inside the Dow. So what is going to be cool about this, that's where the Dow is going to pull back to, and as it's pulling back into that area, what it's also going to be doing, it's going to be testing this long-term rising price channel. So in order for us to be able to determine whether whether or not this is a more serious correction than what it is that's about to unfold, which is nothing more than a normal correction. A normal move inside any market on any time frame is a pullback to the 0.618 level. If you don't believe me, just go trade an intraday chart of the futures contract and just simply put as your targets of swing points of entry and exits and getting into trades the 0.618 level out there. You'll see it happen all the time. That's nothing more than a normal move. So a normal pullback off of that nice move off of November 16th is going to take us right into the bottom of that rising price channel. And if you take a look at the Dow, it has held that rising price channel really well. If that, in fact, gets broken, that'll tell you that we've got big troubles in River City out here. So we'll cross that bridge when we get to it. And so we've got now three confirming signals, really. You can take a look at the 200-day exponential moving average on April 30th. You can take a look at the 0.618 retracement coming off of the November lows of 2012 up to the highs put in 2013. And then we also have a rising price channel out there. What more is it that we need to know where, in fact, the market is moving? So what you have to decide on, what you need to decide today, for those of you that are in your 401k programs that just simply haven't, you're still fully invested in the market, you've got to determine whether or not it's worth the risk when you're trading at 14,720 to ride the market down to 13,006-ish and change out there. If you think that's fine because we're still in a longer-term uptrend, then excellent. And do that, and just know that if we do break that rising price channel out there, that's going to spell some real big trouble in the marketplace. Not until that occurs will that, in fact, be the case out there. So that is on the Dow. You would really see pretty much the same thing inside the S&P 500. But let's go take a look at the daily index charts out here. Let's go see what they are doing. And today's move, again, inside the Dow, if you take a look at that candle, just nothing more than an inside day. Just simply an inside day. And we could see really a couple of these things where we have some relatively minor moves, 60, 100 points. Those are minor moves these days because you take a look at these wide-ranging bars. Those are the big moves out in the marketplace out here where it just simply is recharging its batteries for a move lower. In fact, let's go over to the Dow Diamonds before we go take a look at the, let's finish off the Dow out here before we go take a look at the S&P 500. So I'll pull up the Dow Diamonds, and here's where, you're able to put all of this stuff together so you understand from a trading pattern standpoint what was going on. We were taking a look at the Dow yesterday coming into the swing point from April 22nd. What you can see here in the Dow Diamonds, that swing point had 11.7 million shares. Yesterday's move down, 14 million shares. So you're coming into a swing point with accelerated volume. Yes, it was a rejection on price, but it was not a rejection on volume. It says at the bottom of that swing point is going to be visited. And if you take out that swing point on volume, that's where you see the expansion take place. That expansion being the 1.272 expansion. I've got so many lines on here. Let me just go ahead and erase a few of them. On the Dow Diamonds, that'll take you to a price point of about, give me a moment here to shorten the chart up. That'll take you down to about 141.28. 877-927-6648. Dow's is up 42 points. S&P is up 4. We'll go take a look at the ES Mini when we come back, see what's going on out there. We'll be right back, folks.
The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Traditionally at 727-445-1044.
Welcome back, folks. The Dow's up $55, trading at 14,715. Let's see take a quick peek here at the New York Stock Exchange. Let's see what kind of breadth we have of this bounce out here. So you got net advancing issues, only 884. Not a lot of market breadth to the move up here when you consider that you've got nearly 3,000 issues being traded out there. So the New York Stock Exchange is up about 45 points. It's up actually 0.5%. So the New York Stock Exchange is actually the leader in the clubhouse out here. This is important because I want you to be able to take this information. So as we take a look at that, when I say the clubhouse, I'm looking at really only a set of golfers here between the Dow, the S&P, the composite, the Russell, the NDX 100, and so you've got a seven-some out there. Right, so you get the Dow, S&P, NASDAQ, Russell, NDX, and the New York Stock Exchange. A six amount here. And as we take a look at it, it is really it's a neck and neck here between the New York Stock Exchange and the Dow and the S&P. But it's New York Stock Exchange right now that's in the lead percentage-wise. But yet, if we take a look at the real breadth, if we look underneath the sheets out here, what we're seeing is out of 3,000 equities, only right now 950 of them to the upside here. So that tells you just how weak the underlying components inside this market are, and that's very helpful to understand just simply market breadth when you're taking a look at information about what's going on inside the market. As we take a look at the ES Mini, I wanted to peek in on that on the 30-minute chart. The reason is because I think it's a really great EKG of what's going on inside the system out here. The 0.618 retracement. This will be coming off of the hammer low that came in last evening at 11:30 9:30. That low was 15.58 and a quarter, up to the high as we were coming into the 9 o'clock session, 9:30 session out here, which was 15.82. The 0.618 retracement would take us in about 15.67. So that might be a nice little area for a bounce to take place, to go ahead and finish maybe an A to B equals C to up pattern, so long as the volume as it comes back into that area is light. A better trade setup would actually be coming back and testing the top of the hammer candle, which would be your 0.786 retracement level. So we'll just see how this plays out here. But we're seeing just a slight change in trend from a downtrend to uptrend, so long as the next reversal area takes place above the low of 15.58 inside the ES Mini, the 30-minute chart out here. So we'll see if it can pull back into that area, then get some type of reversal in the marketplace, and that would set up the next A to B equals C to up pattern. Looks like we would have really two of them potentially unfolding if that were the case. The first one is coming off, and this again on the 30-minute chart, coming in from the lows yesterday at 12:30 on the S&P futures. That was down at 15.53 and a quarter, up to the high put in at 2:30 in the afternoon, and then I grabbed the wrong formation tool out here. Let me grab the right tool so I can give you what that A to B equals C to is here. Your 1-to-1 is 15.85, and your 1-to-1.272 takes you up to about 15.90. Let's take a look at the smaller A to B equals CD. So we'll just have to remember those numbers because something didn't exactly work there. If we come off the low of that hammer up to the high that came in at 9:30, and let's assume that we get a retracement back to the 0.618 level. If we take a look at what that would take us to, right around 15.91. So we'd have a 1-to-1.272 completed 15.91, and a 1-to-1 A to B equals C to that we also completed 15.91. That would assume that we see a little bit more of a pullback here during the next half hour. Maybe it's during Basil Chapman's show. It's Tuesday, so we got the options hour from 12 to 1 out here. That would be, again, a pullback in about the 15.67-ish area. We haven't checked in on the commodities. Let's go do that, or the currency pairs out here. In fact, let's start off by taking a look at the currency pair. The real triptych that we want to be paying attention to is this one here. It's the euro Japanese yen. I know there's a lot of noise if you take a look at my stock chart here, but this noise is a ton of great information for us to understand what's going on inside the market. Now, the reason that we're taking a look at the euro yen is because this is the currency pair that correlates to the U.S. stock market. If you want to see what's going on in the commodity market, then you really want to take a look at the U.S. dollar index. But this currency pair here is truly tracking very well to the U.S. stock market. Now, it made a 0.786 Gertley sell pattern. That pattern here was completed at the session of about 4 in the morning on June 20th. And what we can see here, since that pattern was completed, we can see a clearly established downtrend channel that price is traveling in right now. We can see that price is really just traveling sideways here. It's been doing that ever since the session of about 7 o'clock in the morning this morning. These are 30-minute bars that we are taking a look at. So it's really trying to figure out, should it go up and visit the top of the price channel out here, which I suspect is what it wants to do. It's traveling into consolidation, albeit a 30-minute consolidation. It still is traveling into consolidation. When it breaks that consolidation, in fact, when we come back, we'll take a look at this consolidation, because this here is a chart you want to have up on your screen if you, in fact, are trading the ES Mini. And you can have it on the same time frames as well. And it'll help you to make money. It'll help you to scalp, or whatever it is that you are doing and trading out there. 877-927-6648. Dow's up 74 right now. We'll be right back.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. See, we got gold trading off about $3 right now, so pretty flat market out there. Same thing in silver. It's up 3 pennies. Light sweet crude down 24 cents. Natural gas up 7 pennies right now. And when we went to break, we were taking a look at the euro-Japanese yen, the 30-minute chart out here. And what we wanted to do is take a look at the consolidation pattern that has been forming here ever since about 7 o'clock in the morning. Now, consolidation patterns are really cool. One of the most powerful patterns out here, because while you're sitting here waiting to figure out which trigger do you pull. Do you go long? Do you go short? When do you do it? Where are the moves? You want to take a look at prices moving out of consolidation areas. And so I'm just simply going to draw a box out here around the level that's, we're going to take a look at the high, which is at 7 o'clock in the morning. Inside the euro-Japanese yen, that currency pair is 128.03. And we're going to take it to the low out here that came in. I guess it's a green box that I'm using. The low that came in at about 8:30 this morning, right around 127.10. So I'll pull that box off to the side here. I'm going to try to do that. There we go. So I'll pull that off to the side. So that, in essence, is our consolidation zone. Now, what happens with a consolidation, typically consolidations are going to resolve themselves in the direction that they came from. So where was price really coming from this morning? Inside here. They don't have to, but they typically do. And when you know what your outcome is, in this case here, we're really just trying to benchmark which pattern is going to complete here, but it was coming from the lows out here. Now, when a consolidation gets broken, price will move to equal to or greater than that consolidation. So if I go just simply and take this box up here to the top, of this. What you're going to see, if I can do this correctly, pretty close to correctly, what's interesting about this is if, in fact, the consolidation resolves itself in the direction that it normally would, which I expect that it would. Take a look at where the consolidation actually takes us to. If you're watching on Tiger TV, that's great because you can clearly see it if you're listening on your mobile device. Where it actually takes us to, folks, it takes us to the top of the downtrend line that was established here inside the euro Japanese yen. That was occurring right as that 0.786 Gartley sell pattern was in place out here. And that's really what I expect that we will see today. If we see that, if we see a breakout of that, what that will signal is we'll signal higher prices in our indexes, higher prices certainly in our futures marketplace out here. And that's where I expect then we will see a reversal of fortune, if you will. We'll see a reversal where the market will start to move down because this is a pretty nice declining price channel out here. And I do believe that the euro-Japanese yen wants to pull back more likely to the 126 level. Now, it may not resolve itself in that direction. And so you can also take a look at it to the downside out here. And that says that if you get a close below on the 30-minute bar, the low from the session, I would say at 8:30 this morning, right around 127.71 out here, you can see that that next move down will just simply be a retracement. That retracement here, let's go see what that is. So if we go from the low to the high that was put in here, the retracement takes you right to the 0.786 retracement of that move. So it's so helpful to be able to identify and understand where, in my opinion, where this currency pair is going. And these sideways consolidation moves, those two are also very helpful. And it just allows you to be able to sit back and be able to potentially pull the trigger if you want, or be able to identify where at least the next move may head. And if you're in a trade, that's also going to be very, very helpful, especially in a choppy market. In a sideways consolidation market, a lot of people, you can end up losing money. What I say is during a sideways consolidation, you want to really use that to your advantage. Now, you can play from the upper level to the lower level if you want and just wait for those areas. And as well, if you do that, know that when you get a breakout either above or below those areas, that you're probably on the wrong side of the trade, meaning that if price came down to the lower threshold of the consolidation and you went ahead and took a long trade and then price started moving against you, you just want to be able to flip that trade because that trade would be in essence, would be the extent of the consolidation that you just came from. So a ton to be learned from sideways moves out there. Just understand that the majority of the time they resolve themselves to the direction that they came from, the shorter-term direction that they came from. So that's on our euro-Japanese yen out there. As long as we're in the currency marketplace, let's go peek in on the queen, see what the queen is doing. That is the euro. And the euro really setting up this larger, I believe, over time here, this larger 0.786 Gartley buy pattern right around the 124 level, which would complete a 1-to-1 A to B equals CD down. It's got a long way to go before it does that. And it's going to have to get through the Gartley sell pattern retracement level, the 0.618 level, coming off of the swing point low from April 3rd all the way to the high that was put in here on June 19th. And as you can see, it's traveling below the elevator floor of the 0.382 level. That says it most definitely wants to get to the 0.618 area, which is 1.29 and a bit change. Looks like about 1.294 out there. And we'll see as the retracement continues whether it's coming in there with a wide-ranging bar or not. What you can see here is that you can see, what I want you to be able to see is the yellow section here that really on the right-hand side, that blue line going down is also happens to be the measurement of the A to B equals CD down. And that's really what you want to be focused on and paying attention, because as long as price continues to move down, in this case here on the left-hand side of that line, it really tells you that you have more momentum to the downside than we did as it made that A to B leg. And that's going to really reveal a ton of information for each of us out here, at least with regard to where the euro itself is going to go, because as the euro gets weaker, the dollar gets stronger for the most part. Remember, the euro is about maybe 57%. I don't remember the exact numbers off the top of my head, but I think 57% is close enough. So it is a substantial portion of that basket. You just have to get the euro, the pound, and the yen right as it trades against the U.S. dollar to figure out where the king is headed to. If we take a look here at gold, Again, gold really having a flat session out here, off $4, but it looks like it's gold is really down and going to be testing here the swing point from June 21st. That low is 1268.70. It's traded at 1272. It's been down to a low of 1270 today. So it looks like gold should at least move back down to that 1227 range. I would suspect 1227, which is going to be the swing point high from December 3rd, 2009. So we'll see as gold comes into that swing point whether it's going to come in with volume or not. If we take a look at the silver, still the best trade potential, I should say, best trade set up inside the silver is going to be about $17.35. If I go back over to the gold contract, inside here, I believe I've got the weekly chart of the XAU. So let me go ahead and pull that up on my screen for you. As we take a look at this, this had set up really a nice longer term, because it's a weekly chart that we're looking at, a nice long-term Gartley buy pattern, the 0.786 Gartley buy. You had a nice retracement that was coming all the way back. That 78% retracement was coming back into the October 2008 level. And you also had a nice expansion, a little bit over a 1.618 expansion. That was from the May 18th low to the highs that were put in on September of 2012. But you can see we've broken below that. When a 0.786 Gartley pattern fails, well, you know that it does two things. Number one, it says that you're going to go do a 100% move of a move. This says that the XAU right now wants to actually travel all the way back down into the lows of 2008. That could take us down to about 63.52, maybe as high. Looks like that swing point on the weekly is about $95 as well. You're already trading inside that swing point. How about that? I wasn't even paying attention to that. Let me do this out here. So you're already trading inside that swing point. The high of that swing point on the weekly chart is 94.74. So that tells us right now that real good chance. No, it's not. Did I draw that correctly? Give me a moment to do that one more time. Let's see if I pick that out. Let me make sure I get the right high. The high of that is, 86.52. My apologies. So the high of that swing point is 86.52. So we want to be benchmarking the XAU as it hits that 86.52 level. If it can come in there with some volume, or if it closes inside there, that's what sets up a move all the way down to the low of that swing point. So far here during the week, the XAU has been down to a low of 86.29. So it's actually been down to that low. It's rejected it right now, but I suspect that the XAU actually wants lower price out there. That means we're going to have to be a little bit more patient on pulling any triggers out here inside the gold equity marketplace. If we take a look at natural gas, let's go see what nat gas is doing out here. Natural gas now finally coming back here. And this is the daily chart, and completing the Gartley buy pattern, the 0.618 Gartley buy pattern. This had a price projection of about, looks like $3.61. So far, the low that we've seen is $3.63. How about that? Not too shabby out here. Now, what's needed, and this is the daily chart for natural gas. What you can see is this rising price channel. This is coming off of the lows all the way back here. Made a nice low back in April of last year, April 2012. And we can see price really has been contained inside that rising price channel. Now what you have unfolding here is a nice 0.618 Gartley buy. You've got a 0.618 retracement coming off of the level of February of 2012. February 18th, I believe, was the low around 317. All the way up to the high that was put in on May Day, May 1st, out at $4.44. So if you took those swing points and looked at the 0.618 level, that would give you about $3.62 out here. What we also have is a nice 1.618 expansion of the swing point here from the low of May 9th. So from that low to the high that was put in here on May 28th, if you took the difference between those two, multiplied that times 1.618, and subtracted it from the C point of the A to B equals CD down, which was $4.30, that would give us the price target where we're at. So now what do you need? You're coming right up into some pretty decent support out here, which is a beautiful thing, and you're actually doing it on less relative strength. So now all that you really need is you need a bullish candle out here. You need to have confirmation, in my opinion, what you need is you need to have confirmation that the bulls are going to defend their position. And why is that set up for a potentially nice trade? And you can trade, whether you're trading the contract or the UNG, is because if it can't bust it down and it's inside this rising price channel, what it should do is eventually make its way back up to the top of that price channel out here. At a minimum, the move that you would be looking at, we'll go take a look at the UNG itself and see what that trade could look like out here. And I say could because you need to have, in my opinion, you need to have the bulls show up to prove that they are now ready to defend their support line out here. The minimum move up would be about $4.11. That would be nothing than a normal move of a Gartley buy pattern. That would be your 618 level of your A to D move out here. So now let's go take a look at the UNG, see if I've got that. And this is why I don't think on the UNG we could draw those same patterns. We wouldn't see those same rising price channels out here. In fact, here's a perfect reason why. Coming off of the lows here in April, you would not see that same rising price channel out here. So we're going to get rid of that on this chart. We're going to get rid of all of that together. What we can see, though, is we can see the retracement inside the UNG. If we go down and we take a look at the coming off of the February 14th level all the way up to the high that was put in here on May 18th, you can see that's just back below the 0.618 level. But really, this is traded off of the contract. So it's really the contract that we need to be paying attention to where we get our signal from. It is really not the UNG itself out here. But the UNG, let's assume that a low is being put in natural gas today, tomorrow, whenever we see the bullish reversal candle. What you're looking for here, it's right now trading about 1961. No, now is not the time to buy it. What you would be looking for is your retracement is going to be somewhere into about the $22.31 level. So if you like to play the UNG, then it looks like you've got a trade that may be setting up for you. Let's go take a look here at light sweet crude, see what it is doing. Light sweet crude now trying to get back outside of the descending price channel out here. That would not be a good thing. It would really say that, okay, light sweet crude would come back up and test the $96 area. But if it continues to want to bust this descending price channel, what it really does is it says, okay, now we could really see price moving higher. Doesn't seem likely with the mere fact that I can see the euro pulling back and King dollar, U.S. dollar index moving higher. But maybe with world events out there, who knows what. But right now, you've got light sweet crude on the weekly chart trying again to bust outside of that descending price channel. If we go take a look at bonds out here, see what bonds are doing. The bonds here yesterday making a 1 to 1.272 A to B equals CD down in about the 134.03 level. But a little doji candle yesterday. And what we have is we have the leaves again falling off of the tree here. So bonds, let's go take a look at Z in the Den. He's the one that provided us with a outlook here to really be paying attention to the move here in bonds. And that's by taking a look at the 10-year interest rates out here. We can see that still had broken out of the consolidation area or the head and shoulder pattern, whichever it is that you choose to trade. It did that with conviction on this is a weekly chart last week, and which is even more important. It did it with conviction, a real wide-ranging bar to the upside. That says that this consolidation, just like we looked at in the euro, Japanese yen, this wants to move all the way up into about the $3.15 range. $3.15% range out there, and that will put a world of hurt in bonds. Let's go, as long as I'm over in this area here, let's go take a look at the spiders, see what the spiders are doing. Let's go take a look at one of the weakest sectors out here. Well, there's been a number of them, I should say. Let's go take a look at one of the sectors, not the weakest here, but the energy sector. And we're looking at that because of just simply its weighting structure inside the S&P 500. Let me get rid of some of the lines out here because we can always put our lines. But I'll do that, and then we'll come back from a break. Right now, we've got the Dow's up 105, S&P is up 12, NASDAQ Composite up 18. New York Stock Exchange getting a little bit of more momentum out here. About 1,100 net advancing issues out of 3,000. Still not enough to convince me that this is anything more than just a sellable bounce. Whether that's today or tomorrow, we'll see. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a Forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% advantage plus. The plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Right now we got the Dow is up 106, S&P is up 12. Movers in the marketplace, the upside here, we got BlackRock up $5 and change. Priceline up about $5. Trex, T-R-E-X is the ticker symbol. We got a buyout or something going on here. That's up 10% this morning. No news that I see on Trex. Mohawk Industries up 436. Whirlpool up 378. Sherwin-Williams, so it looks like some of the housing stocks here doing pretty well. They're up. Sherwin-Williams is up $3 and change. To the downside, the leader to the downside here so far this morning, Netflix off $6 and change. It's off about 3%. You've got American Vanguard, AVD is the ticker symbol. They are off about 16% this morning, down to $4 and change. Transdigm, TDG, that's off 2%. Walgreens, WAG, the tail is wagging the dog. It's down to 7% here this morning. As we take a look at the XLE, trading up at its session highs right now out at the $78 and change level. We can see the XLE had gone ahead and moved down, made a 1 to 1.272, A to B equals CD down yesterday, getting down to a low of $76.02. You can see the green squiggly line going across my screen here. That is the 200-day exponential moving average. That also acted as a area of support out here. I suspect that we will see that area break. As far as where could the XLE bounce to, well, one area that it could most certainly bounce to would be the top of the breakdown gap with volume. That would be June 20th out here. That high is 79.75. It's going to need some energy to truly get up there. That broke down with about 25 million shares, and as it was breaking down, it was crossing through the B point, slicing through it with volume. That B point was June 6th. So I would be paying attention to the lows of 79.10, which is the low of that B point from June the 6th out there. And if it's coming in with lighter volume, lighter than 18 million shares, and that's probably your trigger area inside the XLE if you were considering a short in the marketplace inside the energy sector. Let's take a look at a couple of stocks here that are popping. I mentioned Walgreens, so let's take a look at Walgreens, see what it is doing. The ticker symbol on Walgreens is WAG out here, and this thing has gapped lower with volume. Interesting. Let me see if I can see any news on this. Walgreens just looks like they missed their, says Walgreens Q3 results miss. Well, let's go see what Walgreens is doing out here. Gapping down this morning. So we've been trading for an hour and 26 minutes as 8 million shares off of the highs out here, taking out the most recent swing point, which was June 3rd. That only had 6 million shares, 6.6. So we're down through that with more volume, and it's coming into its last sign of strength, which had 23 million shares on March the 19th. So it's going to come back and at least test the low of that session, which is 43.10. It's at 44.50 right now, and the volume here again, that breakout had 23 million shares, only been trading for an hour with 8 million shares. Looks like it's going to have volume to take that level out. What does that set up? That could actually set up Walgreens coming all the way back down into the July 19th area, 56 million shares down there. Nice high volume gap. That the actual low, the breakout, has not been tested. But this is not a good sign today here for Walgreens as it takes on its most recent sign of strength here with the volume today. I'll leave this on my screen, and we'll take a look at this here tomorrow. That was on Walgreens out there. Looks like we're into the end of the show here for the day. So, folks, it is Terrific Tuesday. That means that coming up next is our man, Basil Chapman. So ride the wave with Basil. And then we've got the Options Hour from 12 to 1. Great show. If you've got any questions about options, you want to make sure that you call in for that. Daryl Martin from 1 to 2. David White, 2 to 3. Andy Heck, 3 to 4. And the Tom O'Brien Show from 4 to 6. Folks, have a great Tuesday. I look forward to seeing you in the morning. Take care.